Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video, I wanted to review kind of the good, the bad, and the ugly, so to speak. And I say that because we have 3 earnings plays that I'm going to review with you. A couple of these flies look to be picture perfect. A couple of them are going to give us a little bit of heat in the morning, it looks like. But let's just go ahead and take a look at all of it. So the first one that we're looking at here is Amazon. Now, I was looking for Amazon to push higher after earnings, but I did it in a somewhat conservative way by utilizing a butterfly that had a short 825 put option as the body of it. So when this gets ready to open up tomorrow, as we're trading right now, and of course this is an interesting situation too, because you've got the employment data that's due out tomorrow. So while I don't think it's going to cause Amazon to have a complete reversal, it could bring a little bit more of a bid to the market, or we could open up down much further. The way that I would like to see this is that we could catch a little bit of a bid in Amazon, maybe work our way back up into something like 815, and then look to manage it from there. The trades that are looking a little bit better in relationship to the way that we're looking at this is coming in, taking a look at Chipotle, and if we look at this also on if you look at an intraday chart and enable the extended session here in Thinkorswim, this will give you a little bit better graphic display. Now, admittedly, the spreads in Chipotle can be a little bit wide, so same concept here, I'll have to see exactly where it opens. But in this case, we used a strategy that revolved around a short 425 put. So when I was looking at it just a moment ago, right at 425, that's exactly where we need to be. You utilize these spreads in a way where the short 425, in this case by using the put option, that's where we would like to see the price stay above, and then look to make money by maintaining the intrinsic value of the 435 that we are long. That's kind of the core idea of it, but that looks to be opening or trading much more favorably right here. And if it can open anywhere near those prices tomorrow, it should be pretty easy to manage. The other one I wanted to look at was GoPro. Now, what I did on GoPro, because I wanted to be relatively neutral around 11, I thought, the most straightforward way of playing any real earnings play is just the short straddle, looking for an IV crush, and it's pretty straightforward. Now, I did it where you're selling the short straddle and then buying protection by a put and a call. But the thing that we did differently is we sold 2 calls, or 2 call spreads rather, for every 1 put credit spread that we sold. This is just another way of creating a ratio to your spread that gives you a little bit more of a bearish outlook on it. Now, of course, I'd need to see it recover a little bit tomorrow, but this is a step in the right direction. If it can get a bid, it should be pretty easy to manage as well. So that's a couple different ways that those butterflies have played out for us into earnings, what I'm looking at around the management of them, and then we will see what that employment data brings tomorrow. So you guys have a great night, and we'll see you at the next free video.